If you've been abreast of current happenings and your weekly grocery store, you may have noticed that prices are rising. However, one can benefit from this rise in prices. Do you want to know how? This video highlights ways to make money during high cost of living and ultimate ways to profit from inflation. The cost of products and services in an economy generally rises with inflation. A decrease in the purchasing power of money results from an increase in the general price level, which makes each unit of currency buy fewer goods and services. This is why inflation is a result of rising prices generally. Since there are numerous ways to gauge the level of prices, there are numerous ways to gauge price inflation. The most common definition of inflation is an increase in a comprehensive price index that captures the average cost of goods and services across the economy. Examples of broad price indices include the Consumer Price Index, CPI, the Personal Consumption Expenditures Price Index, PCEPI, and the GDP deflator. In February 2022, the CPI climbed to 7.9%, a four-decade high. Since the commencement of the conflict in Ukraine, energy prices, in particular, have risen significantly, which has significantly impacted the high inflation rate. Energy costs increased by 35.7% in July 2022 compared to July 2021. Let's quickly take a look at energy prices. Food costs rose above average as well, by 14.8%. Prices rise when noticeable price rises in earlier phases of the economic cycle. Energy costs have considerably increased since Russia invaded Ukraine, giving the impression that inflation solely has a negative influence on us. However, as you'll later learn, during the inflation of the 1970s, real estate investors generated large gains. Money loses value as a result of inflation. It may lessen debt loads, but it frequently harms investors and consumers. However, some investment choices tend to hold up well and even turn a profit amid inflation. Numerous strategies exist to protect your money from inflation and come out of an inflationary time with more real value. One way to avoid missing out on our videos is to hit the subscribe button right below. Coming up are a few ways to profit from inflation. Real estate. Real estate is a good pick since it generates more revenue from rentals, while becoming a more useful and well-liked store of value due to inflation. Real estate can be purchased directly by investors or through the purchase of a real estate investment trust, REIT, or specialized fund shares. During the 1970s chronic inflation epidemic, real estate performed extremely well. As you know, real estate, unlike other properties, does not decrease in value. So for instance, in March 2022, the average house price in the UK was £278,000, which is £24,000 more than at the same time last year. After nearly 2 years of records, mortgage rates nearly reached levels not seen since before the pandemic in 2022. A plot of property that cost $100,000 in 1970 but remained undeveloped and idle for many years would still be worth much more now. But as was shown in 2007 to 2008, real estate is likewise susceptible to rising interest rates and financial crises. Raising interest rates is the traditional monetary policy reaction to high inflation. Although real estate is a good way to make profits from inflation, you'll love to know that when there is inflation, the cost of raw materials typically increases concurrently with the cost of finished goods created from those raw materials. Commodities. Experienced investors mostly resort to tangible assets that are anticipated to increase in value when inflation increases. Gold and other precious metals have historically served as the best oases, driving up each price when inflation increases. A mutual or exchange-traded fund, ETF, that owns gold can be invested in and buy gold directly from a bullion or coin dealer. By purchasing the stock of a commodities producers directly or indirectly through an ETF or specialist mutual fund, investors can also gain exposure to that commodity. I believe this is why Elizabeth Warren said, "Balancing your money is the key to having enough." Also, raw minerals and agricultural products like oil, copper, cotton, soybeans, and orange juice are examples of commodities. In a context where there is inflation, The cost of raw materials typically increases concurrently with the cost of finished goods created from those raw materials. For instance, increased oil prices increase the cost of transportation and gasoline. Sophisticated investors can trade the shares of producers or commodity futures. On the other hand, exchange-traded funds must roll over their futures holdings as they expire, so they typically underperform the price of a rising commodity. Bonds. Bond investing may seem paradoxical given that fixed-rate debt often suffers from inflation. However, this is not the case with inflation-indexed bonds, which give variable interest rates based on the inflation rate. Treasury inflation-protected securities, TIPS, indexed to the Consumer Price Index, is a common choice in the United States. TIPS are government-issued bonds that assist in protecting you against inflation because their principal increases when inflation does. TIPS also accrue interest twice annually at a fixed rate. With inflation, the value of interest payments also increases and decreases. The value of a TIPS investment increases in tandem with CPI increases. In addition to the base value increasing, interest payments increase because interest is based on the base value. Other kinds of inflation-indexed bonds are available, such as those issued by other nations. The U.S. Treasury's Series I bonds are indexed to inflation, much as TIPS. I bond returns are divided into two halves. One is a fixed interest rate, while the other is a portion of your overall return correlated with inflation, and more particularly the CPI. Every 6 months, the interest rate on I bonds is increased to reflect inflation. Although I bond interest accrues tax deferred, you must pay tax on it at your regular tax rate when you redeem the bonds. Thanks for your time. Have you ever heard of the Federal Reserve? They normally boost interest rates to slow the economy and lower inflation. We recommend you watch our next video. What Federal Reserve does during inflation? How Fed Reserve Works 2022.